Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. I am falling a little bit behind. I have to go about 3 weeks ago to answer Liam Jones' questions in regards to Sayona. What are your thoughts on this lithium producing company? I'm pretty sure they are a producing company. So first thing I'm going to do, particularly if it's a company I know nothing about, and I shouldn't say that. I know very little about this company. I'm pretty sure they are a lithium producer. There we go. The first announcement in their lists was on the 19th of June, and it's in regards to their high-grade drill results at North American Lithium. They also released a presentation on the same date. We could open that up, but the other thing I'm going to do is have a look at the most recent Appendix 5B, which they would have released towards the end of April, and we can just see how their operations are performing. Now, this is a fairly blunt, sort of a general way of analyzing a company like this, a mining company. So they're definitely in production, because if you go to the highlights, instead of talking about drill results, they're talking about production, ore mined, concentrate produced, concentrate sold, revenue 58 million, average realized selling price $999 DMT, unit operating cost 1,536 DMT. And straight away, I can see this company is not profitable at current prices. So that would be a significant red flag just by looking at their quarterly highlights. And if we go to their, and there could be reasons behind that, and maybe this was a bad quarter for their operating costs, and maybe a bad quarter for the realized selling price. And we could just verify this by going to their numbers or their Appendix 5B. And here it is on page 35. Receipts of customers, 29.5 million for the quarter, 152.8 million for the year to date, and burning through a lot of cash, particularly this quarter. Burned through $51.2 million in cash just in operations. That does not include capital expenditure plus exploration and valuation, which amounted to about $24 million. So they burn, well, this company burned through a lot of cash. Now, it seems like the company was operating cash flow positive the first 6 months of the year. So something has happened in this particular quarter. So just based off this quarter, some significant red flags. Now, I don't know this company all that well, and there could be some reasons for the slowdown in receipts, the increase in cost, that sort of thing. So typically, if I don't know a company too well and I'm not impressed by what I see here, I'll just go to the chart, and maybe the company will think something different. And by the way, this company has a market cap of about 300 million. I think it's 300 million or so. Share price is 3.5 cents. Market 300 million, which means this company has, about 10 billion, yes, billion shares on issue. That's probably a little bit too much for this type of company, this size company. Anyway, let's have a look at the chart for Sayona, just see if it's any good, and I have a feeling it's not. And the first thing I'm going to look for is a share price in a downtrend. Share price is in a well-defined downtrend. Now, you could argue there is signs that the downtrend is coming to an end. We have seen a couple of spikes in volume during the first 6 months of this year, but the share price keeps on falling. Those spikes in volume were temporary, and then share price peaked up on those spikes in volume, and then the share price pulled back. And right now, at 3.5 cents. Share price is not that far off the lows we have recently seen, which were about 3.2 cents back in late April, early May. So if the share price, drops below 3.2 cents, the share price is still in a downtrend. But I wouldn't be surprised to see the share price going sideways or consolidating for a while here. And just based off this chart, I have no interest in Sayona Mining right now. And the main reason behind that, it's a mining company. Lithium prices are not doing anything, and the company is burning through cash, as we saw in their March quarter results. So thank you, Liam Jones, for your question. So let's get to the next one. Luca Brasi asked me 3 times, maybe 3 or 4 times, about Parkway Corporation. I'm pretty sure I did a video on that. So let's have a look. Okay, Brookside, I've already done that. So let's go to Darren Numeric, 9148. He's listed about 15 companies here. Botanics, NTI, BMT, 40X. See if I can name all these. Botanics, Pharmaceuticals, NTI is Neuro something. BMT is Beamtree. 40X is 4D Medical. CUV is Clinivel, DXB is Demerix, RCE is Reese Pharmaceuticals, TLX is TLX Pharmaceuticals, EMD is Myriad or something, or is that EMV? And then he's also got a few NASDAQ and New York Stock Exchange companies. So what I'll do is I'll go through the charts of all these companies and give a yay or nay. Yay or nay. And this is just based off the charts. That's it. So unfortunately, I should have written these down beforehand because there's quite a few companies here. And there's quite a few companies I actually do own, but some I don't own. And it seems like most of these companies are biopharmaceutical companies. And on NASDAQ, we have BTAI, no idea. RKLB, no idea. And I'm pretty sure PLTR is Palantir. Okay, so let's have a look at charts of all these 15 or so companies. And first one is Botanics. And straight away, I know I'm going to like this chart. Share price and the trend really turned positive back in early 2023, and it's been positive ever since. They've got FDA approval for their excessive sweating soft or whatever it's called, excessive underarm or armpit sweating or something like that. Anyway, so they got the FDA approval, also did a significant capital raising, and for this chart, and I was only going to say yay or nay for these charts, not talk about the company, so that's what I'm going to do from now on. For this chart, yay. I would like to see a little bit of pullback though. NTI, Neurotech International. Don't know anything about this company. Chart, nay. Definitely a nay for this one at this point in time. Beamtree is not pharmaceutical. It's pretty sure it's a SaaS company. Oh, I could be wrong with that. And this one is close. I could have even said yay not that long ago. Share price has pulled back. Wouldn't be surprised to see a bit of a consolidation period right now. And the volume we did see increasing volume in May. I put this on the fence. I'm going to say nay for now, but definitely one for the watch list. 4D Medical. Whoops, I don't want to change the interval. I want to change the ticker code. 4D Medical. We have, this is a nay. Share price just going sideways. There is no trend. And you just, and what I'm doing for all these is I'm just comparing the share price to the 150-day moving average. Very simple. And then I'll just expand from there. And right now, the 150-day moving average is going sideways. This is just a nay, just going sideways. Could go higher, could go lower. Clinivel, actually, even though I'm a shareholder of this company, I'm going to say nay. I'm going to say nay just because the 150-day moving average is down. Share price is below that at this point in time. So this is a nay, even though I do own it for the long term. Demerix is going to be universal yay. There is going to be a fair bit of volatility with this company because the share price has run up a lot. But this was a brilliant breakout back in October. A beautiful looking chart for Demerix. Share price down almost 10% on Friday, but that's okay. Share price is still in an uptrend. Next one is RCE, Reese Pharmaceuticals. This one is a borderline yay. I'm going to say borderline yay because overall, holistically, it doesn't look that good. We have seen these sort of run-ups before. The last one we saw was back in July last year. That would have been a yay there as well, but share price then pulled back. So this would be a quiet yay, but not enthusiastically. TLX is going to be an absolute yay. Absolutely. I heard the reasons why they wanted to list on the NASDAQ, and I heard the reasons why they actually withdrew from that listing on the NASDAQ. And the only reason is because the share price has run up so much that the American investors wanted a discount to where the share price is right now. And the management said, screw you. I have heard it not said like that, but that was sort of how it went. Anyway, so this is a definite yay. Nice looking chart for TLX Pharmaceuticals. And then EMD, couple of companies I know nothing about. Emeria, this would be an absolute nay. This is absolute nay, no questions about that one. And EMV, Envirovision or something like that. EMVision, this one is was looking like a yay, wasn't it? And the share price has pulled back a fair bit. And I'd say this is a neutral right now, just because of this pretty big pullback in the share price of this company. And the last four ones are BTAI, no idea. BioXcel Therapeutics, absolute nay. RKLB, Rocket Lab USA. This is interesting, but it also looked interesting back in December, January. Also looked interesting back in July. So a fair bit of volatility in this company, and I'd have no conviction. Market cap's 2.47 billion. So this is the sort of company, if it was listed on the ASX, I would know all about Rocket Lab. But because it's listed on the NASDAQ, I know nothing about it. And PLTR, I'm pretty sure this is Palantir. Yeah, Palantir Technologies, this probably would be a yay. I was going to say this was more than likely would be a, this is a definite yay. This is a beautiful looking chart as well for Palantir. Okay, so there it is, Darren Merrick. Even though that's probably not what you were asking for, plenty of lift-off potential here. Sky is not the limit. That's actually true, isn't it? That's absolutely true. When you go long a company, the sky is not the limit. When you go short, the bottom is endless. The bottom is endless. When you go long, the bottom is, there is a bottom. But when you go long, the sky is limitless. When you go short, the sky is not limitless. It's one of the reasons why going long is way better than going short. Okay, Animal Spirit says, great video, loved it. Oh, this is in regards to my top 20 holdings. Oh, that was Darren's holdings. Okay. Now I get it. Animal Spirit asks, what platform do you use for buying overseas stocks? Okay, so I buy overseas stocks in my super, which is with Net Wealth. Problem with buying overseas companies with that platform is I believe they cost $35 a trade. So those companies I've bought, I've held. So those are my long-term holdings. Even for ASX companies, I think the fees are $18.50 through my super. Also trade via Superhero. Now, the good thing about Net Wealth is I can buy a lot of companies on many exchanges around the world. I think it's like 20, maybe even 30 exchanges. I bought companies on, I think it's 4 exchanges in the world. So not only in America, also German, Denmark, and also a few other companies as well. But my other trading platform that I buy overseas stocks is Superhero, $2 a trade. I think it's a flat, yeah, I think it's just a little fee. And I'm more likely to trade in or through Superhero. And also $2 a trade for ASX companies. So there you go. And I'm pretty sure there's other platforms out there. It's becoming easier and easier for us to gain access to overseas exchanges. That's the way it should be. You could trade through Stake, Self-Wealth, maybe even ComSec. I'm pretty sure you can, but the fee's probably a little bit higher there. NZB, oh, this is probably one comment with the most thumbs up, 10. Thank you, NZBRG1. You're an amazing speaker too, no ums or ahs, but I do say okay a lot, don't I? Okay, when I finish the section, I think I say okay. No ums or ahs. I have no idea if I do say ums or ahs much. Great show, Kneppy, says John12785. Good insights. Thought electro-optic systems would make your top 20. No. Back in 2019, it would have easily made my top 20. In fact, it would have been my biggest holding in 2019 because the share price of electro-optics was a 5-bagger just in that 1 year. So I am trading this. I do have a small position, and that small position is my profits, my leftover profits when I took massive amount of profits back in late 2019. And at this point in time, I'm not trading electro-optics right now because the share price has been in a little bit of a funk. So I've been trading it, and I do have a longer-term position. Now, one of the reasons why I took profits back in 2019 is simply because, look at the chart in 2019. So I had held shares in this company for a long time. Maybe not a long time, but I did hold shares in this company for a while. And then the share price started to really go higher. It broke out in May 2019 at $2.50 or so, maybe $3. Share price went all the way up to $10.50. And I still remember taking profits, thinking, when I said to myself, when the share price gets above 10 cents, I'll take profits. And when the share price hit 10 cents, it kept going. It almost got to $11. I went, oh, have I made a mistake? But the best thing I did is not buy back in. I took the profits. I held on to a small amount of shares, and the amount of those, the total dollar value of those amount of shares has fallen a fair bit because the share price has fallen from above $10 to a current share price of $1.42. So my holding in Electro Optics is not that big because my profits, and when I say profits, I don't mean I sold out my original capital position and then I kept my profits in. I took massive profits in this company because my position was fairly big. And I think I took, based off the holdings now, I kept about 300 shares. I think it was 300 shares I kept a position in. And so that was a good trade. And the only thing I should mention, in late 2019, early 2020, I was unwinding a lot of my positions because I thought the market was way too stretched and I thought there was a good chance we're going to go into recession. And that was just fortunate timing. We then saw the COVID-19. And probably the worst thing is I didn't expect the V-shaped recovery we saw and how quick it turned out. And I just wanted the market to remain lower for a little bit more time so I could build up my capital. And one of the things I did is, with the money I made, the selling of my investments, I put all that money to my mortgage. So I paid off my mortgage, and I've built up my investments from almost zero in March 2020 to currently, was it $300,000? And that's just building on, profit, taking profits, that sort of thing, putting a little bit of money each and every fortnight. At this point in time, I'm putting no money into my investments on a fortnightly basis, and my cash balance is just building up. And one of the reasons behind that is most of the heavy lifting done in the market right now is by either those Magnificent Seven, in fact, more likely Magnificent 3 or 4, and a few of the bigger companies in Australia, like the banks, are doing most of the heavy lifting right now on the ASX. But even when I don't see any trend in the markets, particularly the Australian markets, there still are good trades happening. So I do have quite a few trading positions because these companies' share prices are in uptrends. Okay, went a little bit too long with that. Thank you, John12785. Thank you, Neil Weston. Ooh, 9 thumbs up. Mr. Vetpal, thank you for your work. What is the percentage growth for those companies since you bought them? Well, that's a very complex question. Percentage growth for those companies since you bought them. Some are quite significant. Some have more than doubled. I think some have almost tripled since I bought them. And that's probably why these are some of the biggest holdings, because they've done fairly well over time. And why some companies are not in my top 20 is because they have not performed. That's what you'll see over time if you don't change your positions all that much. You'll see the better performing companies in the top of your biggest positions and the worst performing companies at the bottom. It just makes mathematical sense. Thank you, Mr. Vatpal. 9-slide glide. As a fellow holder of IPG, it would be nice to see the growth in cash flow of the business start to match the growth in profitability. 2 notable assets from your large holding are Technology One and Objective, 2 high-quality technology businesses over long periods of time that still seem to be reasonable projects in the years ahead. Okay, I do own Technology One and Objective. Yes, I do own those 2 companies, but they're not in my top 20 holdings. Who knows, that could change. I almost took a trading position in Technology One simply because, have a look at the chart, and it's quite obvious. If you go to now, the share price has broken out. Even though some people believe this company is overvalued at a P/E ratio above 50, it's broken out. The market says, we don't care that the P/E ratio and the company might be overvalued. We think there's pretty good growth. This is a really good looking chart, and that breakout was, this happened on the 22nd of May. This would have been on the results. This is a typical breakout, and I should have traded. I should have bought some shares in Technology One on this breakout. This is exactly what I'm looking for every single day. So a beautiful looking chart for Objective. What was the other one? Objective. What did I say? Beautiful looking chart for Technology One, but Objective Corporation, not so good. Not the best looking chart right now. But I do think the market is underrating this company and even undervaluing this company right now. And I would expect eventually P ratios maybe 40, 43.68. I would expect, because how they deal with research and development, that eventually this company will move into a brilliant uptrend. And we have seen the P ratio of this company more than 100 in the past. If you just have a look at the weekly chart, share price has pulled back a fair bit. So I have bought in on this pullback. And the other company was IPG. So this is interesting. IPD. No, yeah, there it is. IPD Group. Talking about cash flow. So I did have this question when I looked at their results. So let's go to their full year results. No, let's go to the half year results. No, let's go to the full year results, because they probably don't have a reconciliation. So this is IPD Group's financial report. Now, I am a believer in cash flow. Cash flow is king, or cash is king. Cash flow is very important, but context is really important as well. And you really have to look at changes in working capital. So let's have a look at this company's. Actually, what we'll have a look at is first the company's balance sheet and have a look at the main items in changes in working capital, which is trade and other receivables, inventories, and trade and other payables. Two noticeable things: trade and other payables flat, but trade and other receivables up 7.3 million, inventories up almost 10 million. So just in trade and other receivables and inventories, we have seen an increase in both of these of about $17 million. That is negative towards the cash flow. So if this company received those trade and other receivables at a more timely manner, the cash flow would have increased by 7 million. If they didn't build up their inventories by 10 million, the cash flow would have been $10 million greater. So you do have to look at changes in working capital, in my opinion. So that's a $17 million deficit right there. So if you add that 17 million, and this is a really rough way of doing it, the net cash from operating activities would be $24 million, not 7.4 million. So you do have to look at the cash flow sometimes with an idea on what's happening with working capital. They've increased their working capital, increased their inventories, and one of the reasons probably why they've increased their inventories is because business is booming for this company. So I'm going to give IPD Group a pass when it comes to the cash flow statement, because there are reasons behind that. That's just based off their annual report or the full year numbers for financial year 23. Okay, so thank you, 9 Slide Glide. Thank you, Kneppy. Thank you, Sam Beldy. I thank myself then, but I have to thank whoever wrote it. Anderson6379 says, great idea, good topics, thanks. Looking for a question. Thank you, Pretzel Pieces. Thank you for your wonderful, wonderful comments. Hi, Kneppy, great video. Is your 60% return per annum over what time frame? Thanks. Okay, that 60% return is just for my trading, not for my other portfolios. So if I go back through history, so I do trade through Self-Wealth, Superhero, and then I've got my super account. Now, Self-Wealth, one of the benefits of that is you can see your returns since you started investing with them. And my returns through Self-Wealth is 22, 23%. And that's over the last 4 years. That was my main way of trading or investing for quite a few years. Now it's more like Superhero, but 22%. I would have said over the last 10 years, I've been getting around about 20% per annum. And I have been thinking, can I improve that? And technical analysis is one of the ways I think maybe I can ramp up my returns. So I have been testing it over the past year. And yes, in my using technical analysis, I have increased my returns a little bit. And this particular portfolio, just using technical analysis, is now up 63% for the financial year. That's just 1 year. Can I replicate that over the next few years? That's very important. Plus, we've had a pretty good year in the markets. Has been okay. Can I replicate that sort of return when the market's maybe not doing so well? That's the other question I have. It's a long project. Thank you, Dave Family Adventures. Hacho says, I'm much better than that Switzer flop. I don't know about that. I am very kind to every single person who is in this field. The only thing I don't like is closed-minded individuals who say or suggest to their audience that their way of investing is the only way to invest. I ignore those sort of experts because that's absolutely false. There is many ways to invest, trade. You have to find what works for you. That's what I'm doing right now. I'm trying to find what works for me. I have found what works for me, but I can improve what works for me as well. So there are quite a few people out there who believe there's only one way to invest, and I'm looking at you, Phil Town, who actually said on his podcast once that there's only one way to invest. It's my way to invest, and he's sort of a Warren Buffett disciple. And as soon as I heard him say that, I have not listened to him since. So you have to understand there are many ways to invest, many ways to grow your wealth, and you have to find what works for you. Are you risk averse? Are you a risk taker? All those set of questions you have to answer yourself. There is not one way to invest. It just so happens that I love technical analysis right now. I just love it. Love looking at charts. David Jackson says, so much great information. Welcome. You're welcome. This was a very popular video, by the way, so yeah, it was a good idea. Joe Blog says, I love this video, very insightful, fantastic to hear the stories behind share purchases. You're welcome. Baisan will end up being a great business, says user YU6MB blah, blah, blah. Good get. I like Baisan. And yeah, there's another question from Luca Brassi about Parkway Corporation. Thank you, Nice. Or Nice. Maybe it's pronounced Nice, like French. Good confidence as well. So the whole point about confidence is very important, because you can sound really confident about something you have no idea what you're talking about, and you'll come across as though you know what you're talking about. Confidence is very important. And on the flip side, you can know exactly what you're talking about, not sound confident, and people say, "Oh, this person doesn't sound confident." And sometimes confidence and naivety goes hand in hand. So a lot of naive people will sound confident about something they're talking about and have completely no idea. That is a problem as well. Daisk, nothing better than investor YouTuber with skin in the game. Keep up the good work, mate. You're welcome. I have a lot of skin in the game. You misread that. Liam Jones says, you misread that. I didn't buy Star yet. I was thrown to 40 cents cheap, thinking it would bounce to 55 cents, which is a quick trade, not that it would break up from there. But I'm keen to sit back and wait for something. Let's have a look at Star. Let's see how it's been doing. I'm definitely continuing to follow this code because I think Liam might be right. Maybe 40 cents is cheap, and he didn't quite say it, but I think Star is close to seeing the bottom. I think Star is close to at least consolidating, but it's not quite there just yet. We've also seen some big volume coming in, so I don't think we're just there quite yet, because there's still a lot of negative sentiment in this company, and that negative sentiment will slowly fade away over time. That would be one of the reasons why I think it'd be very beneficial for Star Entertainment Group's share price just to go sideways or consolidate for a long time, and that way all those negative shareholders who want to sell out have the opportunity to sell out. They become bored, sell out at say 50 cents, and then eventually the negative sentiment in this sector will go away. They will open up their casino in Brisbane, which shouldn't be that too long away. And then I think this could be an absolutely amazing longer-term trade or investment. Possibly. Not an absolute, but definitely a possibly. Steve McCabe says, Fenix is more than an iron core company. That's absolutely right. They have a fantastic transport network and port facilities, which they share with other miners. They're going from strength to strength. I actually do agree with that from Stephen McCabe. Fenix is, I've held Fenix off and on over the past few years, and this is probably one mining position which I should have maintained. There has been a little bit of volatility in the company's share price, and the share price recently has gone counter to the iron ore price. So it's definitely not just an iron ore. They do have that transport network as well. So I do like what this company is doing. They are diversifying. So thank you, Steve McCabe. Simon PT 2000 says CTM is that Centaurus metals is so undervalued if you're prepared to hold for 2 years or more. So CTM is Centaurus metals. I was just thinking this could be also corporate travel management, which is CTM, but their ticker code is CTD. So I'm assuming this is CTM Centaurus metals, which is, if I remember correctly, nickel explorer in Brazil. I'm not sure how long their project has to go before it's in production. So if you just look at this particular chart, I would say probably give this right now a nay, a very weak nay, but close to becoming an almost yay. But again, this is a mining company, maybe not in production just yet. And if nickel falls 50%, Centaurus Metals share price will suffer. And in fact, the whole reason the share price of this company has rallied is because nickel prices have rallied. Now, if he was talking about CT corporate travel management, this would be a nay as well. This is a big nay. However, I do think this has the makings of a high quality company and possible value at these levels. Possible value at these levels. I'm a shareholder of corporate travel management and just possible value at these levels. Flora Docs Pro. This is a very good video, very informative and educational. Your presentation here is really professional. I would not call myself professional, but, thank you, Flora Docs Pro. Stephen Harrison, I'm intrigued about GDC, which is Global Data Centers, because of the sentiment around data centers. Would love your thoughts on whether the current divestment they are doing is a good sign for their future projects or prospects or not. It's a good question. So they divested of something. They also have a stake in Air Tank. Is it Air Tank or something like that? And I think the reason why the share price has rallied is because this divestment surprised the market how much they got out of it. And that's why the share price has rallied. There's me taking a position. This is just fluke timing. So this was, I went back in time and went, when should I have taken a position in global data centers? And the share price really broke out back in April 2023 and at about $1.40. You can see that was a classic breakout. Beautiful chart from there. So $1.40. I eventually bought in at $2.36. Share price now $3.24. And you can see share price ripped higher on the 20th of May. That's when they divested out of whatever it was and have a lot of money. And the question I have is, what are they going to do with the money? And there was talk of Air Tank, whatever it's called, of Air Tank. What was it? There was talk of Air Tank either listing or selling out or not divesting. What's the word? Of someone buying Air Tank or something. I forget exactly what. So there was talk that Global Center would not have that investment as well. So there's potential maybe they lose both investments. So the question I have is, what are they going to do? You notice the divestment of Perth Data Center. So they've made a few divestments. And yeah, so there are a few questions what this company is going to do. There it is, divestment of ETEX everywhere, 175 million. And it just made a mockery of the valuation of this company back then when they did sell, because yeah, it was a really good price. So ETEX everywhere. Can't remember if they have mentioned what they're going to do. But at this point in time, all I'm doing is based off the chart. There's no reason to sell my position in this company just yet. So just fortuitous timing for my part. But yeah, I no idea. Sorry, Stephen Harrison. I have just no idea. James, U1IUYDYB, MMC, there is more upside. Is this Mitre Mining? Okay, so what I'm going to do, I have no idea about this company, what they do, whether they're mining. I'm assuming there's a mining exploring company. But definitely, look at the chart. Chart looks really good, doesn't it? So you can see two things. Share price ripping higher and volume ripping higher. So you have two things going for it, but who knows? Market cap of the company is only $90.7 million. So the market likes this company right now. Chart looks pretty good. But yeah, it's a mining company. And that's the major problem with this company. It's a mining company, but there's a lot of buts. Sometimes the best returns can be mining companies, particularly if they're valued really low. Even 90 million can be a low value, and they make a major discovery. And I would just be trading companies like this and just a volume. In fact, when did the share price break out? So let's just go here. We started to see increase in volume in February, and there wasn't much reaction from the share price. But then the share price broke out somewhere in late February, early March at about 30 cents. Yeah, I would have said if I was trading this, I probably would have bought in maybe the 18th of March at about 32 to 34 cents. This on this day here, the 18th of March. That is when the chart looks really interesting to me. And we had the increase in volume. So if I was paying attention to this company, yeah, that's when I could have seen me taking position. But again, it's a mining company. I want to limit my mining trades. I want to be more selective. I've been less selective. I want to become a little bit more selective when it comes to these trades. But that's a really good looking chart. Raven says, like to have a beer sometime. Funny enough, I don't like beer. I don't like alcohol. I hate the taste of alcohol. However, I do have 2 bottles of whiskey, and I will have, on occasion, whiskey shots. So even though I don't like the taste of alcohol, having a whiskey shot, very quick, and it's just the after effects. Not talking about getting drunk, just one shot. It's just a warm glow feeling throughout your body. So whiskey for me. Yeah, I'm not a big alcohol drinker. And Raven also asked, you looked at Tab and eBay. Tab. Well, I can look at eBay. I haven't looked at eBay for many years. And, oh, the chart of eBay looks actually really good. Let's have a look at the weekly chart for eBay. eBay's chart looks really good. There you go. Thank you, Raven. This chart actually looks really good. Nice little breakout. Beautiful breakout. The very definition of breakout on the 28th of February at $48. Hasn't gone up much since then, but still a nice looking chart for eBay. And Tab. Do you mean Tabcorp, which is TAH? If you do mean Tabcorp, I'd say no. This is absolute no. Low quality company. Chart looks absolutely horrible. But eBay, thank you, Raven. eBay looks pretty good. Looks Luxy. Hi, Kneppy, love the videos. Keep it up. Any thoughts on PNC? Is that Pioneer Capital? I have a feeling it's Pioneer Capital or Pioneer Credit. You mentioned them in a previous video. They purchased debt portfolios. I'm not the biggest fan of those sort of companies. So Credit Corp used to be another company that had problems, and they've gone now. They might have been bought out by Credit Corp. Currently organizing a senior debt refinancing, have improved collection margins, and are returning to profitability. Samuel Terry recently purchased a roughly 15% stake in the company, and they're trying to get around $20 million in profit in financial year 26, which will render their forward PE very low. Momentum seems to be building. So let's have a look at Pioneer Capital. What's the markup of this company? Let's have a look. Pioneer Credit. Markup, 65.99. If they make, what'd you say, $20 million of profit in financial year 26, this company would be dirt cheap right now. I do like when companies have that sort of goal. I love when any company, no matter the company, has a goal. Because when you have a goals, you can set your sights on achieving those goals. It's very important. More companies should do it. Okay, so just based off what you've said here and the valuation, it does sound interesting. Now let's have a look at the chart for PNC. Is there anything interesting here? And the chart looks interesting as well. Yes, the chart looks interesting as well. Okay, so we have downtrend up until the start of 2023, consolidation period for about 1 year, and now the share price has moved into an uptrend. I have not. Do you have this company? I have this company in my financials watch list. I'm going to put this company into my other watch list that I look at every single day because this chart looks really intriguing. This is definitely something to run my eye over in the future. Thank you. Whole point of me doing this channel is to share ideas with you. But one thing I have found is I do get a lot of ideas from you. So give me your ideas. I love to see your ideas. Michael Jordan. Oh, actually, no, it's Michael D. Jordan-Vic. If it was Michael Jordan, that'd be awesome, but alas, it's not. Many thanks for your videos. I've learned a lot from you. Some questions. What is your position size in your long-term portfolio and your short-term portfolio? They've already like this. Do you vary depending upon the company? What percentage cash do you hold? How do you maintain the cash buffer from net trades, dividends, or do you top up with fresh money? How many positions do you have in each portfolio? I'm guessing about 25. Okay, that's lots of questions. What is your position size in your long-term portfolio and your short-term trading portfolio? Well, my position sizes range from about 10 million all the way down to probably about 2 or 3 million. And the main reason why some of our sizes are larger than the other positions is because our performance, they perform better. So typically, in my long-term portfolio, I will take initial position of between $3,000 to $5,000. So in terms of my complete portfolio, we are talking about fairly small percentage. So we are talking about right now, that would be 5,000 would be less than 1%. Okay, so I do have a lot of holdings, by the way, a lot of holdings. This belief that you should only own 20 companies in your portfolios or 20, 25 companies is complete. It's not valid for most investors. The idea behind that is you diversify if you hold more than 25, but that's on the assumption that you're only owning big companies, so the biggest companies, so companies within the ASX 50. That's all you're owning. But if you're like me, and particularly when I'm talking about my small cap portfolio, I have a lot of really small companies in that, and they can outperform the market or underperform the market, and I have no bearing on how the market performs because they're so small. Over time, what I want to do is I want to keep my longer term portfolio down to about 25% and trade the other 75%, simply because of how I've performed in my trading portfolio in the past year. If I can get 60% per year through my trading portfolio, that would be amazing if I can keep doing that. So even though I've been doing that, getting those returns in the past year, I've got to see if I can maintain those returns moving forward. So that at this point in time, I want 25% in the longer term, 75% trading. At this point in time, it's sort of the reverse, 75% long term, 25% trading. What percentage cash do you hold? At this point in time, I have put nothing extra in the market. So you mentioned here, do you top up with fresh money? At this point in time, I don't, because I have a fair bit of cash to, what's the word? I have a fair bit of cash to put into the market that's just waiting for opportunities. And right now it's probably 15%. I'm in 15% cash. So that's enough. So what I'm doing now in my bank, getting nice little interest rates, a nice little return from interest rates, is I'm just spending my cash. And so I can do other stuff with that cash because I don't need that cash to be invested right now. It's nice to have a cash buffer, and my cash right now in my bank is almost $20,000. And if I do find a lot of good opportunities out there, I can then go back to that cash. And I don't have, some people, you will get told if you go to a financial planner, you need a cash for a rainy day in case something bad happens. And I have that without doubt. And my job right now is with the government. I'm not going to lose that job unless I want to. Anyway, so hopefully that has asked most of your questions. And any dividends, what I do is I just reinvest those dividends. Put that to I don't take any dividends out that I get and spend that money. I just put that back into my investments. And that's how I do build up cash over time, through dividends, through my profits, etc. Thank you, Michael Jordan-Vic. Okay, this is an interesting one. Yet another great session, Michael, or Mr. Kneppy. I was skimming through ComSec's site and came across BAOR. I have never heard of this. BAOR. It says the fund will invest in a concentrated portfolio of 10 to 15 stocks drawn from international equity markets outside Australia. But can you share more light on this, please? I have never heard It's a weird ticker code as well, BAOR. Aoris International Fund. Okay. So let's have a look at this company. Now, this is a fund, which means we can get a lot of insight around these fund managers just by some of their announcements. So what I'm going to do is have a look at their quarterly report. Hopefully, they will mention what sort of companies they invest in. Now, more than likely, this company has fairly high fees. And we also want to know, does this company outperform the market? Now, let's have a look at the chart first. I would hope the share price is in an uptrend. Okay, so illiquidly traded through time. So it listed back in 2023, and the share price has gone up from $2 to about $2.48. So the chart looks pretty good, but it is illiquidly traded, and probably can see that, yeah. So there's 3 buyers and no sellers. So that is a little bit of a problem with this. How often does it trade? It trades almost every day, but small trading. Okay, so the next thing I just want to see about this company is what sort of companies do they invest in? They also have a return here. So you have a look at their returns. Seems like they do well based off this. I'm doing this very quickly, by the way. Okay, and hopefully they talk about NVIDIA. So if it's weird because you'll find fund managers who are invested in NVIDIA and have invested highly in NVIDIA will be outperforming everyone else. So a fund's performance is highly dependent on whether they've invested in NVIDIA and a few of those other companies. So it looks like this particular fund has invested in NVIDIA based off this, maybe AMD. Now, maybe they're just talking about that. They're also talking about Tesla here, but they should have a list of companies they've invested in. Okay, this is some of the companies they've invested in. Portfolio changes, Compass Group, Visa, Tractor Supply, Costco. So straight away, there are some high quality companies right there. I just wanted to see if they had any list of companies. I didn't see any list here. Oh, there's some companies here. So Microsoft, L'Oreal, Visa. Yeah, so there is a little bit of a list of companies. I want a bit more extensive list. So I was going to go back to some of the announcements. Monthly report, maybe there could be something in that. Oh, here we go. So they're doing pretty well. Portfolio holdings. So according to this, they're not investing in NVIDIA. Maybe they've sold out that position. 50% in USA, 21% in Europe, 14% Asia Pacific, and rest of the world 8%. We've got Essentia, Amphenol, Atlas Copco, some of these companies I've never heard of, CDW, Cintas, Compass Group, Copart, Experian, Fastenal, Halma, L'Oreal, LMVH, Microsoft, RELX, and Visa. So some interesting companies within their portfolios. Yeah. So I don't know. For me, I don't invest in fund managers. I just like to invest in the companies I like. So if you like that group of companies, if you like the companies this company invests in or this fund manager invests in, then the decision for you is this a good fund manager for me? So that is a question for you. So thank you, George Nowak. I have never heard of this particular fund manager, and I'm going to put this into my funds and LIC watch lists. George Nowak says, by the way, a weekly AN update is produced by ComSec each Monday, Economic Weekly Market Report. There you go. I had no idea that happens. I had no idea ComSec does that. Where can I find that? Well, I'm not going to try to find it in this particular video, but I will try to find it eventually. What did you say it was called? Economic Weekly Market Report. Okay, so thank you, George Nowak. Andrew Chacha, are you able to share your trading view setup? I like this setup. Let's go to trading view. And let's have a look at the first company in my technical portfolio. Trading view setup. So we have 4 lots, actually it's 5 lots of moving averages. We have a shorter term, 25 and 50. We also have the 100 and 200, and in between that, we have the 150-day moving average. So the 25 and 50 is sort of like a short term, so short-term sentiment. The longer term is longer-term sentiment, And the 150-day moving average, which is this solid blue line, is sort of my proxy uptrend. So one of the rules I want to instigate into my trading, whatever you want to call it, my trading book, my trading rules, is to only trade companies whose share price is above the 150-day moving average. So the other day I went through all my trades, and yeah, most of my trades share price is above the 150-day moving average. The other thing is, when I see a breakout, say for instance Fisher and Paykel, on the 29th of November, we saw the share price break above the 150-day moving average, and that was probably the shift in sentiment, because the share price started going higher ever since then. It started to accelerate. So that's what I'm doing. I'm developing rules, and I think that's a pretty good rule. Also have these numbers. That's when I bought and sold. So this is actually when I bought Southern Cross for the first time, and I've added to my position here. And down below, I have volume with a moving average volume line as well. I believe volume is quite important. Would never just look at volume, just like I would never just look at price action. So when you look at price action plus volume, it's quite powerful. You also might see some lines. So any lines I have are either trends or resistance and or support zones or lines. And I've been recently just dabbling using rectangles. So doing this for resistance support zones, because resistance and support is more like a zone, not a one-up price. Now, in saying that, round numbers tend to be natural resistance and support levels. $1 is a natural resistance and support level. And that's it. I'm very simplistic when it comes to the charts. So just some moving averages, resistance, support, and a volume. I, on occasion, will look at some other indicators, but that's very rarely. I would not trade based off those. Just gives me an idea. And to be honest with you, when you look at this, you can tell sentiment, momentum, any of those things just by looking at the chart. Thank you. Thank you, Andrew Chacha. Excellent. Nice says, excellent listed companies. Most of the investors will be happy to hold majority of these companies, and seems like you timed your entry well. Most important point. That is a very important point, isn't it? Timing is important. I did that really well with American companies a few years ago. I started timing because I thought those companies were becoming good value, and just so happened that was towards the end of that small bear run. Should Percival says, great video, Kneppy. I'm still talking about comments from that My Top 20 Holdings. WA1 is West Arunta. Thank you, Shelley Dugmore. Yes, it is. I thought it might have been West Australia one, but that's their project, isn't it? West Arunta. Impressive trade on Atlas Pearls. Nice one. I've done actually a video. I prepared a video for Atlas Pearls and that particular trade, and I will eventually record that video. But this was a really good trade. And I've got to acknowledge when you've done well, just like you have to acknowledge when one of the trades goes the opposite way to you think, because you learn from both your winners and also your losers. So here it is. So I bought it at 5.7 cents in September of last year, and then I sold at 20.5 cents in when they released their results. So that's a nice, not quite four-bagger, it was close. And the share price has fallen a fair bit since then. It's more than halved since then. It was just, this is a commodity. Pearls is a commodity, just like a mining company. So it is, share price of this company is going to move in cycles. And right now, it's in a down cycle because Pearl's Pearl prices have fallen since last year. And that has affected this company's share price. So wait out for that video. I'm not sure when I'm going to do it, but eventually I will record that video on Atlas Pearls. Oh, here's the one. Method 341 says, are you going to ignore Droneshield because you sold out of it early? Okay, welcome back. I actually had to go to my other account to get my superhero account up because the what do you call it, browser, Chrome browser I'm using for videos, I don't have access to my superhero account in that because password. Anyway, so these are three of the holdings I have: Droneshield, Deterra Royalties, and Demerix. Notice Droneshield, I bought at 74.5 cents. Currently up 120%. Deterra's up as well. I thought I bought it a little bit higher, but it's at $4, which is what I wanted to buy at. I thought I bought it at $4.10. Now it's $4. And Demerix is up, by the way. Oh, it's up 98.7%. I thought it was going to be up a little bit more. So why do you think I don't own Droneshield? I did trade Droneshield, but just because I sold out of a company or a position doesn't mean I won't buy back in. This is a problem with a lot of investors, I do know. Once you've sold out of a position, you just can't buy back in. Why? Why do you have that thinking? It is a really bad way to think about something, that if you've sold out a position, then you can never buy back in because you're admitting to yourself you made a mistake. I make mistakes all the time. And I did take profits with Droneshield, and I bought back in fairly quickly when I went, oh, I think that was a mistake selling out. And was it a mistake buying back in? No, I'm up 120% right now. And I haven't even thought about trading this position, to be honest with you. Yeah, no thoughts about trading that position. So, yeah, so let's go out of this again, and let's go back to here. And why does it do that? So let's go back to, are you just going to ignore Droneshield because you sold out of it earlier? No, I have not sold out of it. I bought back in. I think the reason why Method 341 thinks I sold out is because of the belief that once you've sold out, you can't buy back in. That's a really bad way of thinking about it. So I am not going to give that a thumbs up. Sorry, Method 341, no thumbs up for you. In fact, I will reply to that at a little bit more forceful way. Infinity says, long energy, and it was a brutal day for me. Tax balancing trades. Sometimes context makes 2 weeks ago, so I'm not sure context of that. This time of year, a lot of people do sell out of losing positions to because of tax reasons. Is that the best thing to do? I don't know. I've never done that before. Okay, I'm going to end it there because we're getting to an hour long. But the next, look, I started this video with a Liam Jones question, and I'm going to start the next video with another Liam Jones question. Anyway, that's all for this video. Have a good day, and I'm not sure why. There we go. Not sure why that was not performing. Anyway, if you have any questions, any thoughts, leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.